Okay, 4th of July, Rudy here. I started this channel in March last year to help people build portfolios, being an ex-financial advisor myself. And today we're looking at one that I specifically built for those in the member direct super, where you can invest in ASX 300 shares. So I've got other ones, ASX and US shares and ETFs. But this one was specifically for, those who want to get out of the ticker box and do something proactive. Now, this is a pretty hardcore one, and it's pretty active in the trading point of view. So if you're just a ticker box person and don't want to look at the markets or learn about trading, chart structures, buy, sell signals, then this isn't for you. So it is all trades are public. So if you're an existing member, you won't learn anything from this, except I am going through, I did an analysis of length of hold and a few interesting things, which you can tell the people that's BS if I am BSing. All right, so yeah, so we started 1 July with 100 grand, and it got to, 166, but the last couple of days we've had some good gains because the portfolio is heavily focused on mainly resource stocks, although later in the year been trading healthcare and tech stocks because gold has been smashed since February, March. And so you can see here, these are all mining names in the current portfolio. Okay, so how do we, so I thought, well, how do I go through this? So we follow investing rules. The number one rule is don't fall in love with a stock, because I'm sure you all have a stock which you're way underwater with, but you love it. It's a great company. Typically a CSL person falls into that, but I'm sure you all have one. I have one. But that's the number one rule. Don't fall in love with the story. We don't chase. If a price is taken off, we let it go. And why? Because every day provides a new opportunity. So every day there's a new opportunity. What we like to do is we buy bottoms. So declining wedge breakouts, rounded bottoms, near support. So just as an example, I guess, of that. So like Chalice, we just bought the other day. So this is Chalice Mining. So these are the, so we use, so there's our declining wedge and there's our rounded bottom. So that's our entry point. And we'll get to the next rule, which is that's our stop loss. But in also identifying this as a bottom, we had an A, B, C corrective move. They're the length of the A, B, C moves. So we're looking for a bottom around these areas and just under prior support. So bang. There's lots of, let me just go through. Like Palladium, I'll go to a weekly chart. Palladium, bang. PME. PME, there's our declining wedge. There's our rounded bottom, bang, bang. We actually took profits on that because it met a measured move. And it goes on. So they're the types of buy signals that we look for. We cut losers early, so we use stop losses when structures are broken. So we do that to minimise our loss, and this is where the don't fall in love. That's where people mainly fail, because they'll the structure of the share price is going down, but they love it, so they say, "Oh, I'll hold it. It's in super. It's long run. We might even try and average down," and that's how you get slaughtered. What we do is say we stay with the winners until the trend is broken or target reached, measured moves. And we hold around 20 positions. So if we just look at, because this is this particular model portfolio, and I send alerts out each day on buys. The sells, like on this, the stop losses, because I can't spoon feed you everything. So there would have sent out on the day, so that's the buy, and the red line indicates the stop loss level. So that's up to you to adhere to. But in terms of, as I said, it's not for the faint-hearted. So in terms of these transactions, like you can see here, so where April, you can see here we're going through, it's quite active, as you can see. But if you want to make outsized returns, there's no way you can buy and hold anything that makes a good return. So I actually did an analysis of that I was going through, which the new existing members haven't seen this. So the average trades was around 14 per week. That's buys and sells. So trade size. So 5,000, which is, say 5%, although it started with 100 and we got up to 200 odd, 60. So some small ones, medium, $5,000 to $15,000, 40%. $15,000 to $30,000, 30%. So you can see a great chunk of that, 70%, is in that sort of 10% range. So keep on average around 20 shares in the portfolio. So, there's 5%, 20 times 5. Go overweight sometimes. Like here, 15% if you're really gung-ho, feeling good about it. Holding time distribution. Okay, so around 10% of the trades basically get closed off in a day, and that's because of stop losses. Because again, going back, so we pulled the trigger here. If that, for example, the day after dropped below this level here, then it's a sell. You're out. Trend's broken. There's something wrong. So then, actually, in terms of this one, we'll be looking for a measured move. Take the depth of the wedge and add it to the breakout. So we'll be looking for price action at around $1.45. If we get any of these shooting stars around there, then we'll be out. So that's so 45, so a big chunk of them, you could say for a week. Then 30% of them for 1 to 4 weeks, and then there's a smattering of them which we hold for over 1 month. Holding time versus profit. Okay, so this sort of comes into so in that 0 to 1 day, so we're taking a loss, or just making a profit. So the stuff, basically we're just clearing the decks on that first day. Then so short term, so in a week we're sort of clipping 4 to 8%. So then over 1 to 4 weeks, we're targeting 10 to 18%, and then longer term over 20%. So we're just trying to scalp 10%, 20%. That's the idea, and you chalk them up on a regular basis, and it all adds up. Well, it all adds up to 160%. But it's not for the light-hearted. So if you're not for the light-hearted, I did start it hasn't been going, what we call the tank. Ninja is because they're active. So I've I only started this one in May because some people were saying, I can't, this is too much trading already. So we're up. I mean, this isn't meant. So all these holdings, these are all dividend paying shares: Andcore, ARB, Brambles, Cochlear, CSL. So these aren't trading shares. They're just buy and hold, but we have culled a few. But this one, yeah, we started it was only in, so we started in May, so we're up 13%. That's excluding dividends. VAS has been flat. So the idea is this is for the less passive people, but we do use stop losses. So for example, we had TPG. So we had TPG in the portfolio. So we actually, what happened with I'll draw them in. So we had our declining wedge because they're paying 5.2% dividend. So there's our declining wedge break. So textbook buy, no rounded bottom really, but then it came up and had the stop loss, and because that's what we want to avoid. But then at the same time, we've had Wesfarmers. We bought Wesfarmers. Look, that was only in 25th of May. There's your declining wedge break. But we haven't sold it yet, but I've moved it out of the portfolio because I can't expect someone to buy that. Ventia is another one in the tank. So the idea it's just to buy and hold, but if you can make, like Ventia was in, and that was actually sold. So if they will run like that, then we'll take profits. But it's not the idea of the tank portfolio. It's mainly you got to have at least 4% div, and it's you don't have to be watching for stop losses each day. All right, so if you're interested, I'm not on YouTube anymore. I'm on Substack. So basically do daily videos, on the market and the model portfolios. And for these ninja ones, I do intraday alerts. So if you're interested in learning charting and all that kind of stuff, you come on board. I think you can get a 7-day free trial. Yeah, I'm just here to help. All right. Have a good weekend, guys.